that, but it is what it is. Strait of Hormuz is paralyzed. We'll dig into some fun funds. All right, momentum. This is not because of the war. I'm just going to point this out. This is a monetary issue. This is private credit. This is what's been going on with Japan. But it's exacerbated, it's accelerated negative momentum because of what's going on with Iran. This is a risk-off environment. Now, are we going to fall 80% like some 89-year-old financial newsletter man probably said yesterday? No. Remember, monetary support is still pretty ample. It's $525 billion in support. That is helping to prop up the market. I estimated it. Probably we would be down around 15 to 18% if we didn't have that support. But right now, we're just kind of burning along. So this is why something completely different than what you would have thought about when it came to markets 20, 30 years ago. Everybody would be selling. Everybody would be heading for the exits, but they're not. And they're not because key support levels are critical. Algorithms are in charge. If you don't know how to trade volume weighted average price, if you don't know how to trade expected moves like what Don talks about, if you don't know how to trade monkey bars, what our good friend Blake talks about, this is the opportunity to make money. Because if you learn these things, if you learn how to trade these expected moves, if you learn how to trade between these ranges like Tony talks about, you're going to be smarter than 95 to 96% of traders out there. And you're going to be basically taking advantage of their overreactions. And that's what we're trying to educate you on. That's what we're trying to get you to think about. The opportunities are going to be not chasing the headline, not going crazy, not trying to short things just because everything's red, but to trade in the ranges and those deviation moves that exist. And that's how you start to pick off $1, $2, $10, $15 per share. And then that amplifies if you're using options. So be very patient, be very diligent, and don't allow bias, and don't allow, the idea to sit here and say, oh gosh, the market's going to go down 25%. I'm going to short it. I'm going to start buying S&P 500 puts. That's not how it's going to work. It's going to work where we're going to hit a 100-day moving average, and then the S&P 500 is going to go up 3%, and then maybe it rolls back over. So don't just short to short. Follow these ranges, follow these moves. Be very, very diligent in the way that you trade. The big opportunity and the big story is in oil. It's very rare that we get these opportunities. And I want to stress, I'm not a war guy. I'm not excited about what's going on in the world. But I will say this, as a trader, I have to take advantage of the volatility that exists right now. I have to. These events happen 18, 24 months. It's not fun. I'm not claiming that I'm, running headfirst into this, but I am going to just state, these are the moments in time. You have to remember, over time, things normalize. Things normalize. We move back to calm. War is not the norm. So what do I think about right now? What are my goals? What are the things that matter to me right now? I want to be able to put my kid into college, right? And the next 4 to 5 days are actually going to present that opportunity by movements, sharp movements, in things like what I talked about yesterday. I was not popular when I said I could not wait to short energy yesterday. And it went down. XOM went down. The XLE went down. VWAP, right? We moved lower. It was only $3, $4 on the XLE, right? From the gap up to the gap down. This made my month, right? The second that we cracked under that level, I bought the 58. We moved lower, and it's only a 50-cent move. But if you're focusing on short-term options into Friday, and you're keeping a tight stop and you're using weight, this is the time to learn standard deviation pricing, the way that this works. It's very simple. What you're looking at, that blue line, is volume weighted average price. Okay. And I didn't know this a couple of years ago. I didn't. My good friend Kenny educated me on it, and then I learned how to trade reversion, and then I learned how to short to the downside. And what I'm looking for is moves to the downside, down in that standard deviation line, but also when we crack under that blue line. And I'm using TradingView. We have this set up for you if you need a pretty simple screener for volume weighted average price with Thinkorswim. We have it. Scott, please throw that in the chat. And all I'm doing, and this is simplistic, we gap up, everybody gets excited, people start buying, algos sell. Once it breaks under this line, I take shots to the downside. And as you can see, we had a couple of periods yesterday where, nothing really happened, right? But here's yesterday. There's that move down. 57 to 56, $1 move into Friday. And I'm not buying out of the money. I'm not buying down at 55. I'm simply trading around what VWAP is or wherever we were before it started, which is at the money at the $58 level. And that's not going to be 400% on your money, 1,000% on your money. That's going to be 20% on your money. And with 20% on your money, hey, you're going to Applebee's this weekend, baby. And if you don't like Applebee's, I don't blame you. Maybe you go to, I don't know, Texas Roadhouse? No. Where do you go? What's a good place to waste $150? Dave & Buster's. Strait of Hormuz is paralyzed right now. Energy market is in shock. 20% of global oil supply transits through the Strait of Hormuz. Now, if I asked you to point this out on a map, would you be able to? If I showed you a island off of a coast, would you actually not know it's Japan and it's actually Madagascar? The reality at this point is this is going to spike. It's going to accelerate. I want to remind you, this is not going to be permanent. I actually thought this war would be over today. I think it'll be over on Thursday now. They hit Saudi Arabia's largest refinery. They hit the biggest storage area, and Salalah, the Omani port, was hit as well. And the thing about this port is not that big. I remember my father and I were drinking martinis on a ship in that port saying, oh, so this is Oman. Okay. It's going to be loud. It's going to be noisy. But how do you make money on this, right? Well, I'm going to remind you, everybody's going to be chasing oil prices. And a lot of people are going to be wrong because, yeah, maybe we go to 100, but then we turn right back around and we fall pretty sharply. That's what I'm looking for. I'm looking for overbought. I'm looking for overreaction. I'm looking for the retail traders to make huge mistakes right now. And when it becomes time, we flip back to the volume weighted average price. We short when we drop below this line. We keep short duration options. We focus on the XLE. We look at Permian Resources, Occidental, Devon Energy. But there's more. I'm going to remind you, this is a wonderful reminder right now that there is always money in the midstream. There is always money in the midstream. Kent Moore's taught me that, and I have never forgotten it. So, names like PAGP, right? Plains All-American Pipeline. And people go, well, it feels like it's just overvalued right now. Well, first off, let me just point something out. I've been long this since it was at 16. Plains, very high capital efficient company. This has 30% upside. From here, then what else is there? Okay, Plains, look at PAA, look at EMO. This is the Clearbridge midstream. And I know that a lot of you have been following that recommendation. Like, people are sending me emails saying, hey, I get to go to Applebee's now because you recommended this. And I'm not saying this, I'm not being sponsored by Applebee's. You get to go to Texas Roadhouse. Secret Agent Charlie, what's your favorite restaurant? If you say Applebee's, I'm leaving. I'm getting up and I'm walking out of my house. 44 to 53. And where is there additional opportunity? Look at names like BSM. Like, these things are kicking off 8% cash, right? That's the trading strategy. You buy the midstream, and then you use the cash that is paid off quarterly to trade. You're not losing money if you have a losing trade. You're just simply, well, you're having a good time. That's all that matters. 13 to 15, $22 upside. I'm just saying. Buy these midstream things right now. Even though we have all this uncertainty, I'm going to be with the compound on Thursday, and my debate is going to be, why are you trying to buy software stocks when BSM is trading at an incredibly cheap valuation? You get 8% a year, and you can take that cash that is kicked off quarterly and use that to trade. It's the best. All right, let's keep going. What investors and traders should do now? Oh, I feel like I just did that. Iran, there is a liquidity trap that we've talked about. The Gulf strikes are happening on top of an already fragile support system. I think there's going to be overreaction. I think there's just people want to raise cash in this environment. That's what war forces people to do. Pare back your credit exposure if you have it. Private credit risk is still elevated. We still have these defaults rising. Trim U.S. equities right now. Be a little cautious. Only focus on things that kick off cash. And that's where we're moving now through the backside of this liquidity cycle. Rotate out of tech. Rotate out of financials. That's what people are doing right now. Don't try to call a bottom on anything unless you're seeing ample insider buying. But even if you're seeing insider buying, that's not a panacea for, I don't think I used that word right. That's not a solution. I don't think I used that word right. Let's move on. Iran strikes, direct catalyst. I feel like I sound exactly like Joe Kernan right now. Utilities, consumer staples, mid-duration treasuries, and once again, hedge funds are moving into China. They're buying up. They're buying up China because they're printing money over there. And it's a reminder, this is a very simple trade. This is like, it's almost too comical. How about we look at our good friend WB? Okay, so here is Weibo. I couldn't tell you what they do. I assume they have a file on me. But 20-day moving average, all right? If this cracks above its 8 and its 20, then it becomes a buy. You don't do anything now. So while all this chatter is going on around names like that and Alibaba, well, the chart's telling you to stay away. But if they're printing money and if money starts to flow back into these equities, 20-day moving average, very simple. It has to crack above that, and then we look for the real upside. Price tells you everything. Narratives do not. All right, it's 9:01. John Flax here. R. Shosky. Big Dave. You keep using that word. I don't know how words work. How do they work? You know, it's funny. My parents paid a lot of money for me to be a journalist, and it's just not taken right now. All right, BS Smokey is in EMO, BSM, Energy Transfer. Check out Enterprise Partners, EPD is the ticker. And I'm kind of warming up to DMLP, which is Dorchester Minerals. So let's add that to the list, and let's look at where it sits. Oh yeah, that's a good looking chart, right? And what's the yield? 10%. Kind of like, and I got my head kicked in on this one a little bit because I was down on paper from 32, but it's starting to recover, and that's honestly all you can ask for. All right, the calendar this week, it's war, baby. Waller's going to talk today. The JOLTS report is open. Let's talk about the runner. All right. This is a casual reminder that volatility goes both ways. And instead of talking about the stocks that are breaking out to start, I want to pull up this. This is the SVXY. If you don't know what the SVXY is, well, you're in the majority. The SVXY is a great indicator. It's a short-term volatility inverse, right? So when the VIX, when the UVXY goes up, the SVXY drops. But this is something that if you have the money, there's two additional screens that you should always have on both sides of your computer. The first is the SPX VWAP on the left. And on the right is either the UVXY or the SVXY. Because what you're seeing right now is, well, if this is going down, that means short-term volatility is going up, which means the Qs are going down, which means the S&P 500 is going down. I want you to, as we move into this week, I want you to be able to trade this because you're going to see moves that are going to be pretty wild, $1, $2, $3 moves. And what you're doing is you're following our good friend volume-weighted average price. Pretty simplistic. You break above that level, you take a little bit of a shot, you buy at the money, and you buy into Friday. And if it drops, it drops. And that's just life. That's the school of hard knocks, baby. But the reality is you're keeping a tight stop. You're willing to lose 5% because if this does run, if vol does drop, the SVXY can run $2, $3, $4, $5 in a week. And that's where you're starting to talk about not just 100% gains, not 300% on your money. You're talking 4x. You're talking 1,000%. You just have to be disciplined with it. Look at the option chain. It's not going to cost much. Don't just buy it to buy it. And by the way, the other side of this is the UVXY. Right? Same thing. And look at the, again, range bound. $1 moves can make you a lot of money if you are being patient and you're waiting. I'm not asking you to sit here all day and look at this chart. What I will tell you, where is the optimal time to do it? On the hours. Come back to your computer 5 minutes before the hour. 5 before 11, 5 before 12, 5 before 1, 5 before 2. And just see where this is. And if you're down here, toss $100 at it. And then go to Applebee's on me. I don't even like Applebee's. I need to find something else to talk about. This Applebee's bit is horrible. I apologize to everybody involved. Need to move on with my life. Chili's. Oh, yes. Sizzling. Just sizzling things. Oh, you're right. I'm sorry. Chili's. Chili's is the best. Who is that? IQR? ISR? Erica Northport. Olive Garden. Get out of my country. when you're there, your family. There is no Apple. No, I hate Applebee's. I was looking for Chili's the whole time. Chili's is a very special place. You will meet some very interesting people at Chili's. Did you know? Oh, no. Here's a random fact. And I want you to tell everybody. I want you to, next time that you are in a casual conversation with your parents, just drop this knowledge bomb. The most profitable day of the year for Chili's is Valentine's Day. You can't unsee that fact now. The most profitable day of the year for Chili's is Valentine's Day. It's all about the sizzling steak, baby. All right, USAR, CLF, and Dino. Let's take a look at one of my favorite stocks to trade, which is USAR, U.S. Rare Earth. It's not doing good. I own about 300 shares of this. I've just been selling calls on top of this, and I think that that's a pretty good trade right now. If you go back through the logic of this, remember, U.S. government every now and then steps back in, makes some sort of noise around it. I think this is just a good take what the money, take what the market is giving you, buy at the money, or buy maybe the 18 call, or maybe buy the $15 call, and then sell to the upside. And then if you get taken out, you get taken out. That's called a poor man's covered call. Poor man's covered call is pretty simplistic. But let's just go to, I got a website now. I feel like somebody. All right, USA.
It doesn't have poor man's covered calls yet.
What are you doing? How do we screw this up?
I didn't think we would need them.
No. You just don't know what a poor man's covered call is, my friend.
There goes my afternoon.
Hey, no. Do you know what a call spread is? It's a poor man's covered call, my friend.
So just reverse it, or no? You have to do a different. I never programmed in to be able to do a different.
Everybody,
calendar.
This is the voice of God. If you don't know, this is the new advanced feature of Claude. That when I make a mistake, a voice just starts calling in, and that voice is Scott. No. Bud, all you got to do. $18 call, $15 call, right? Like that's at the money. And then you sell out of the money. That's a poor man's covered call. Can you acknowledge that you understand what that means now?
I put them in. I was lying.
You know,
it was there all along.
It was always you're the best. All right.
I always sold my poor man cover calls a month out. So I never do them in the same calendar. That's why that makes sense. Like in the same expiration.
All right. So anyway, the man who designed our website is learning how options work, which is awesome. I'm just going to say to the chat real quick. We're gonna give you guys access to this soon. Give a little bit of a round of applause to Scott. The guy just hums along and absolutely just creates incredible tools. That doesn't. I want to show everybody how far we have come. This was a site that I used to use, and Don used to yell at me. He'd be like, "You have to get off this. Look at all these ads." Oh wow. Well, at least it's not sexy wives from Russia. At least it's Tasty Trade now. And we've gone to that. I mean, that is just no ads, just straight up nice, clean. Scott Dunn, everybody. Hey, if you're not in the chat and you're not giving Scott credit right now, get out of my chat. So my point is USAR, right? Huge move. Buy in the money and sell out of the money, right? And the worst case scenario, like we can talk about calendar spreads, we can talk about other opportunities as they emerge. Go out and buy something like USAR. Go out into like September, right? And then what we're doing is we don't have this functionality, but I'm not going to ask him to do this because it's just too much. But the point is, if you buy into September and then you sell short duration options, right, you can always claim the call. You can always execute anytime you want, right, because it's in the money. And if you sell out of the money and you do it short duration, so if you buy September, August, July, but then you sell the February, March or the April or the May, and the stock rallies and it goes through that level and somebody claims it, all that happens is you take possession of the shares. You're going to pay a little bit of a premium to take possession. That's okay. And then you unload those stocks. That's known as a calendar spread. I love that. I love that. Crocs. Hey, Secret Agent Charlie, what are you doing? Put a smile on your face, 10 miles wide. All right, I like that. All right. Scott, this is incredible. Would it be good to add Delta? Well, if you guys want to tell Scott, this is actually pretty fun. Scott will tell me, hey, can you come up with some ideas to make this better? And I get tired because I can't keep up with him. So why don't you guys do that? Why don't you guys tell him what you're looking for? And we'll go from there. He would love more work on a Tuesday. Let me tell you about Scott. The guy loves good work. Crocs, CMCA, that's Comcast. That's Lulu on the backside. I don't really have much of a trade on these things. These are just on the short end of the short side. I'm just going to note right now, I think you have to focus your attention this week on energy. I think that there's more opportunity than anything else. So, like, even though this stuff's going to fade in the background, it feels like it's going to. And once again, more things that Scott built. Here's our triple conviction list. We're starting to see energy names pop up, right? So Occidental has hit this list. What does that do? It creates, this is a very highly liquid stock. Oxy has rolled. Warren Buffett's excited. But the key thing here is I'm not trying to take Occidental to 70. What I'm trying to do is trade it over volume weighted average price, 55.84 to 56.60. Deviation moves, 2 standard deviation moves. And if it presents itself, guys, you've made your month. And then you get to go to Chili's. I'm going to beat this bit into the ground. You're not going to Applebee's. You'll have so much money, you don't have to go to Applebee's anymore. That's the better bit. You can afford more. You can afford Chili's. What do you think of that bit, Secret Agent Charlie? So you're looking for standard deviation moves down here, downside, and all these names, right? This is triples. We're going to talk about it today. Motorola, McKesson, Dell, Oxy, PG&E, CMS Energy Corporation, Amarin, and Netflix. Those are our positive momentum stocks. And then to the downside, I'm just going to tell you, this has not gone away. So for all the people trying to call the bottom on private equity and what's happening with private credit, it's not going away. I will note CoStar, CSGP, had a huge insider buy. But I'm not going to touch this. I'm not going to trade it. What we're going to focus on moving forward is we're going to look at these names. We're going to look at Fifth Third, CBRE, Blackstone, Weyerhaeuser, Apollo. We're only going to trade them if two things happen, and this is important. An insider buy, CEO, CFO buy, and then they drop off this list. They're not on this list anymore. That suggests that negative momentum is being evaporated for this equity. And then at that point, we can do a lot of different things. We can look at different probabilities. We can look to try to sell spreads. But if it's falling off this list, and this is important, if it's falling off this list, the market is taking it seriously. You see that Blackstone is still number one on this list. You see that General Mills is still on this list. You see that Weyerhaeuser is still on this list. They've had insider buys. They've had contrarian bottom calls, and they're not getting off the ground yet, right? So think of this list as your 10 count for boxing. It's still down. The ref is still pointing at it and saying 7, 8, 9. It's not getting up yet. And if I say this, I say this with a little bit of humility. I thought that I knew a ton about insider buying. I thought that I really had it down. But what this has shown me, and I've learned this in the last week and a half, and again, golf clap for Scott Dunn, the reality is that momentum overshadows insider buying. So just because the CEO and just because the CFO buy, if it is still on this list, it's still a short. And KKR was on this list. KKR is finally dropping. You see it's down at the bottom of the list, but it's still on this list. KKR had massive amounts of insider buying at 100. It hit this list at 115. It fell to 85. So what we have here is pure evidence that there are still problems in the financial system itself. And barring we get some level of QE, I'm going to tell you, like everything on this list that you see, these are going to be stocks that are probably going to go up in the next 3 years, probably 50 to 60%. But what's going to cause that? It'll be caused by quantitative easing. The moment that the Fed prints, the moment that they have to say, hey, we screwed up, all of these equities are going to move much, much higher. I'm not telling you to buy them today. I'm telling you to take this list, take Fifth Third, CBRE, Blackstone, General Mills, Citigroup, PNC, add them to your list, and look at the 20-day moving average. And if they pop above that 20-day moving average, buy it. And then that's your stop. This is the worst of the worst. And it's fantastic that we can actually measure this. On the positive side, it's really pretty ugly out there, right? This is only 6% of the breakout momentum stocks, but it's still the same names. It's PG&E, it's CMS Group, it's Amarin. And how do you trade this list? I'm going to make this very simple for you. And this is going to be the end of our conversation before I go down the street and sit in the parking lot of Chili's, smoke 3 cigarettes, and go get some sizzling steaks. They don't open until 12. That's okay. It'll be fine. Here's what you do, okay? Take these names. Look at your probability of profit. You don't have to buy out of the money on any of these names. You look at Netflix right now, right? Netflix is running. It's had a good run. It's up on the month. It's up on the week. Here's what you do. You buy in the money. You buy 2-3 ticks down, and you sell at the money. That's going to give you a nice buffer on to trade this stock. So you look at Netflix, right? NFLX, okay? It's currently sitting at 95. You've missed the move since it fell to 78. But if you buy a call here and you sell a call here, you're going to end up with a trade, and we're going to go through this later today, where your probability of profit is going to be in the 60% range, and your output, your potential gain, is going to cap at 60%. And that's what you're looking for. You don't have to make 400% on your money. You need to make 60% on your money so that you can take your sweetheart to Chili's. Hey, this has been a terrible bit. I apologize to everybody. I feel the need to constantly be doing bits. But that said, I appreciate everybody taking the time to join me at 9 o'clock in the morning out of one bloodshot eye. Secret Agent Charlie, I hope you're doing well. Scott, Eric, yeah, we got the slides for you. Dale, I hope you guys have a great time. I'm not going to Applebee's. Get out of my country. It's all about Chili's, and it's all about sizzling steaks, and we're going to go from there. Don's going to be up at 9:30. He's going to throw on probably some Van Halen, and we're going to go from there. I'll be back in about 3.5 hours. I hope everybody has a great day. If you have any questions for me, as always, I am here, support@TheoTrade.com. Put Garrett in the subject line. Oh, Tall Tex is just now taunting me. You guys don't have a place called the Corner Stable. In Maryland, there is a restaurant called the Corner Stable. Scott's dad used to go there all the time. I used to go there all the time. My dad used to go all the time. You go there, you get the full rack of ribs, the crab cake, and you play Keno, and you bet 17 and 23. I hope you guys have a great day. Cheers.